All right, all right. What's going on, everybody? Go ahead and get everything connected. All right, all right. What's going on, everybody? Once we're connected, I'll get it onto the Discord and then we're ready. Go ahead and get everything connected. All right, that is good. Hey, how y'all doing? All good? Well, it's Friday. It's Friday. I mean, that's all I got, man. It's just Friday. What's your weekend plans? Uh, a really good friend of mine lives a few blocks away, and even though he lives that close, we we really don't hang out that much. But I made an effort of reaching out to him last week, putting plans together for this weekend. So tonight we're gonna go to his house, have I don't know, burgers and fries or whatever. We're gonna hang out, spend time together, and then if it didn't get rained out, we're going to the races Saturday night. That's the regular Saturday night dirt track. Go to the races. Last year it was, but it changed ownership, and the new owner, who used to be the old owner before he sold it to somebody who just screwed everything up, and the old owner said, "Oh no, screw this, I'm buying it back." He bought it back and moved everything around, and now we're back to Saturday nights. So all year it's been Saturdays, but yeah, last year that was Fridays. There was a request to discuss the buy right index, and I went to AI to see if it had any insight, and it had some background on why it was made and when it was made and who made it or who greatly contributed to it. But it didn't have any insight on how to use it, at least not the way that I use it. Um, so we're going to talk about this one a little bit. Every day in the morning briefing, when I do my briefing, one of the questions we're always trying to ask is what's going to move the market today? And are we even going to move at all today? So the choices that we have is it could be moved because of the news flow, right? We can get some big headline news that can move the markets, dollar, treasury, bonds, yields, commodities, options. Something's always driving the market. And maybe we can spot it, maybe not, but that's the going question every day is who's in control, who's pushing the market, and is it something that we can spot? Well, the buy right monthly index is a way to gauge if the influence on the S&P, the Nasdaq, the broader market, if the influence is options related, you can see it in the buy right monthly. And that's cool because it's free. You don't need black box stocks, cheddar flow, and spot gamma and trading ticks, all those other expensive things. You can just go to the buy right. This is Thinkorswim, and on the left hand chart, we have the buy right monthly. So it's available on TradingView, Thinkorswim, because it's just an index like the VIX index or any other tool that's out there. Apparently, you can trade it. When I was talking to the AI, it was talking about how people can use this as a way to enhance or protect their portfolio. I'm not really interested in the tradable opportunities that are applied to it. I just use it as an indicator, trying to get a feel for, is the options market bullying price action today and driving us higher or lower? And the grid that I use on TradingView has the Japan component to it. So I can ask the question, is it options or is it treasuries? But on Thinkorswim, I can't build that Japan one. I tried multiple times today, no luck. It's US 30 minus JP 30. And this three grid chart, the ES on the right, buy right in the middle, and US 30, JP 30 on the left, is my way of gauging, is it treasuries and bonds? Is it options? Or is it something else? Usually it's one of these two. And if we was to add another chart, I would add something like the VIX, right? That would be another chart. Chart number 3 would be replaced with the VIX, and then we would add the fourth pane, something like that, and then put the VIX here. But if I add the VIX in this context, what I like to do is invert the VIX so that it moves in the same way as the S&P. So to do that, just take it, multiply it by a -1, and that'll flip the darn thing over. And that way, visually, it looks the same, right? So now we got the JP30, buy right, inverse VIX, S&P, and they all have the same shape. So then we're just trying to gauge leaderboard and who's in control. The one that breaks out first, the one that makes the move first, or if there's an outlier where one isn't paying the same game as everybody else is playing. If one continues to go higher after reaching this range, for an example, and breaks out to the upside while the others are breaking down, that would be a heads up that something is wrong, something's deviating from the group. Otherwise, if you look at all four of these, they look exactly the same, mostly, right? I mean, I have this one as a line just because it's kind of a visually unappealing product. We'll put it into a candle here, but a lot of times it just has lots of wicks and it's kind of ugly. So I turn it into a line a lot of times. But there you go. They all look very similar. Today, nothing stands out as being a dominant piece. They're all right now sitting in this really low section. None are breaking down first. And in fact, we can see that the VIX is actually showing a green candle and buy right is showing a green candle, while the treasuries and the S&P are still red. If the S&P breaks down here first and continues to move lower before these other three, then we know absolutely it has nothing to do with the broader market's options. That's really important to make a distinction. This BXM is the broad market, not just the S&P's market. So if we see the S&P break down out of this little range and run before the rest of these guys do, then that tells us that it's the 0-day options flow in the S&P itself that's doing the breakdown, not not the options in the broader market that's doing the breakdown, right? Big difference between those two. So I keep my eye on this through the day. It can change. In the morning you can have one leading and then later another one can lead. But what I find a lot of times is if there's ambiguity or if it's just a lot of noise, then it's just a lot of noise. You have to be able to accept it, like looking at it and saying, "Yeah, we don't got anything today. There's no help from this," and then we just move on. But if there is help, if there's a shining light, I want to take advantage of it. Yeah, but that's actually what we're looking for to see who's driving the market. So if US 30 breaks down and then the others follow, then we know treasuries and yields are driving the market. If BXM breaks down first and the rest follow, then we know that the broader markets options are driving the market. And if the VIX breaks down first, we know that it's the volatility that's driving the market. Whichever one responds the quickest or starts the move before the others follow, that's the one that's dominant. Speaking of the other markets, buy right is a covered call strategy. There is a put strategy too for the S&P, and then they also made this same thing for the Russell, and they made one for the Nasdaq. I grabbed those symbols in case anybody wanted to take a look at them. So these are the other ones. The symbol is PUT. That's pretty easy to remember on the put side. You literally just use put because that's what it's called. And then for the Dow Jones, it's BXD instead of BXM. And for the NASDAQ, it's BXN instead of BXM. So if you wanted to compare or look at different products, I think the other one, like put, I don't know what I want to do with put yet. But if you wanted to replace the BXM with the BXN for NASDAQ, that would make a lot of sense because the hyperscalers, as we know, really dominate the market. So this is the BXN, the NASDAQ version. We'll see if we can get it on Thinkorswim. It looks like maybe no. We might have to check the trading view and see if it has it. Okay, so Thinkorswim doesn't have BXM. Maybe TradingView does. Yep, it has it, but looks like it's a daily chart. Oh, bigger, weekly. So this has a once a day value. I don't like charts that have a once a day value. That's like the move index and those others that just it's like they just check in once a day. Um, so I don't like it, but that's the Nasdaq version. That would be good if you're running, say, technical analysis on broader market structure and the health of the market, swing trade evaluations, money flow, capital rotations, growth versus value. That would maybe come into play. But for the day to day stuff that we're talking about, intraday stuff, looks like you'd have to stay with the BXM. So yeah, that's something that I use all the time. I don't stare at it all day long, but I circle back to it and check against it throughout the day. Just taking a glance at it and kind of asking the question, does anything stand out that I need to be aware of? And if not, yeah, great, no problem. BXM does not work in the pre-market, but the US 30 JP30 that does work in the pre-market. And then of course you got the VIX. So, at any time you can have three of these four running. And if it's in the middle of the day, then of course you can have four of the four running. The VIX, though, in the pre-market's not always all that useful. Still, it's better than nothing. And if we are getting volatility in the pre-market, it will respond, right? If it's a boring, slow Monday morning, then you're not going to get anything really out of the VIX. But if something kicks off suddenly, the VIX will wake up and start moving. So it's a go-to, right? It's a nice little tool to see what's going on out there. But collectively, it is the broad market, right? If you think of the S&P 500, you got 500 companies in there. Every one of those companies has options. So if a bunch of calls are being bought in all the hyperscalers and in all of the growth names in the S&P 500, and there's just a lot of calls, a lot of short puts, bullish activity, it'll show up in the buy right monthly index. If collectively in the broader market, it's really negative out there and they're selling calls and buying puts, it'll show up there. So I like it. It gives us a perspective of what's going on collectively in the broader market. And this is not a new concept, right? This has been around for a long time. It was developed in 2004. And if you go to, say, Spot Gamma, they have an intraday options tool that is evaluating the broad market backdrop and asking, what's going on in the broader market out there when it comes to options. Trading Tick has something kind of similar that you can do in the chat, just backslash net, I think it is, net flow. And if you put in market instead of actually giving it a symbol, then it'll give you the same kind of outlook. I just did that in the chat. If you want to see it in the replay, it was right here. So I did market instead of a particular name. Of course, it is still using SPY, but the options that it's looking at are across the market itself, not just SPY's options. As opposed to doing backslash net and then putting in something like SPY, which would be still the white line would be exactly the same, but you can see how the red and the green line, they don't match what was posted the first time because these red and green line is for the broader market of options. And in this one, the red and green line are just for SPY's options. So you can kind of use this if you want, or you could use the buy right monthly index. It's going to give you the same uh, perspective. There are a lot of tools out there, right? Like it seems that every week I come up with some new thing that has been around forever, but new to me, that I hadn't run across before. When I was newer, one of the things that I did is I took a lot of time going through this indicator list. And I learned a lot just by going through the list and researching these different components. These are market breadth indicators like that put or BXM or one of those things. Skew, UVol, DVol, tick, trend, all those kind of concepts. They're all market breadth concepts, and all of these indicators are market breadth concepts. So you can come up with some pretty neat stuff that way. But if there's no signal, then there's just no signal. And then we're left to our own devices trying to figure out who's in control. At the very least, though, if there's nobody that we can spot as a dominant leader, then we know it's going to be a day kind of like today, where we stalled out and we're not getting any action, and we're not getting any flows, and we're not going anywhere. It's not a surprise that we're not going anywhere. We don't have any leader. Yeah, we got nothing. I closed the XLF trade that we had put on a while back. I closed it today, by the way. Um, it had 1 week left in it if you was to stay in it, but that radical swift descent this morning put it back into a profitable state, and I just took advantage of it. Go ahead and close it. And I did post that in the chat, but I wanted to make sure that if anybody had missed it, they understand that XLF calendar, I believe it was, that we had started with. Maybe it was a diagonal when it started. Either way, it's been closed. And then on Tuesday, I had called a butterfly for last Friday's close. That was the target. And it got run right the heck over early in the week. But I closed that one today at 200% profit. That sounds good, but it was only a $4 option that I sold for $12. So, yay. I'm almost made enough to pay for a cup of coffee on that one. This was all of the trades done to XLF before it finally got closed. Started at $17, rolled for a credit, and then more credit, and then another roll, and then finally closed for $34 in profit. That's 100%. We started at 17, we got out at 34. It's not bad. So I don't know. What do you guys want to look at today? It's funny that I got an English translated Ichimoku indicator so that all of the lines have their English translation to it. It's in the Thinkorswim workbook with a very detailed write up on using that indicator. Earlier today, I was digging around on the Fred data within Thinkorswim because you've got government information in there, and I came across a Nikkei chart, which I thought was cool because Thinkorswim does not do a good job if you want to look at what's going on in the FTSE or the Nikkei or the Hang Seng. You just can't really chart other nations' indexes on Thinkorswim very well. But it's Fred data, it's government data. This is not going to be useful for like intraday stuff, but you can get a really good feel for it and it's just right there on the site. So Thinkorswim, if you're not familiar with it, has economic data right here. It's under the Analyze tab. And when you go in there, you can find all kinds of stuff in here. Right? They've got just a massive amount of information tucked in here. You got academic data, a lot of research and things that go all the way back to the 30s. You've got health, education, population, tax data. Man, you name it, it's all in here. Well, I was in here, I was digging around trying to find things on JGB 10-year and the Japan government bonds. And what I ended up finding was intervention st- stats, which I thought was still pretty cool, but it wasn't what I was looking for. But yeah, you can chart all of that stuff like jolts, unemployment, weekly claims. It's all built within Thinkorswim. The charts that I post or that I show are on the YouTube page, right? So here's how you get there. Scroll back to what I post every morning. Look where it says the replay for the video and click that, and it's going to open the YouTube page where those videos randomly pick one, doesn't matter which one it is. I got a shellac reaction. I don't think so. And scroll down. So there's the charts. While we're on the topic of that, I've done blog posts on the morning briefing. And if you read through this, it has other pages linked to this page. Right? So as you read through it, it'll connect you to the economic events page that I wrote up, and another page that talks about the different apps that I use,
everybody,
or the different websites that I
been
use.
waiting for it all week. Finally got it. The morning has come.
So watch what you read, where you
absolutely
keep track of where you're at when you're reading it, because it'll have share links that open up different pages.
It is Friday on a short week, first week of the new month, and we've been waiting on.
I gotta eat, right? So
it's been a big deal.
Preparing for the day
have been keeping your eye on dollar bond yields, treasuries
into a profitable place.
VIX. There's been some odd behavior out there, and it warrants a little bit of caution in front of this print. And this isn't even the big one, right? I've often said,
find
that with all of these places that we check in the morning, all of these calendars.
Got it. All right, so one thing that we have coming is there's going to be this big jobs revision on September 9th. Let's see if we can get Grok to talk about this. Maybe Grok can provide some depth behind it. But this is a really big deal. I've seen publications that were talking about this back in May of this year, that they know there's a big revision coming. It's going to have the new benchmark revision for the non-farm payroll employment data. From April 2024 to March of 2025, economists and analysts are anticipating potential downward adjustments, with some estimates suggesting a reduction of up to 600,000 jobs or more. The final benchmark won't be published until February of 2026, but the September 9 release will provide early indications of adjustments. I have a feeling that this is going to hit the market with some wow behavior. Now, I don't know what way we're going to go with it. Maybe we go up, maybe we go down. I don't know, but I think we're finally going to get out of these doldrums that we've been in and really break loose because we're not seeing any of this show up in the options data. They're not hedging that level, they're not protecting that date. They're not ready. Always every time I say that, it reminds me of the Kevin Hart when he was like, "No, we're not ready." Yeah, yeah, no, he's not ready. Let's get logged into Gamma Lab here and show you guys the structure here on the SPX. Maybe they're in the VIX, huh? Let's swap over to the VIX and see. Hey, do it. That's not what I'm looking for. Come on, you can do it. Quitter. There we go. Now we just got to zoom out. Well, I can't get it to zoom out. I don't think it likes this browser. Well, at least it's responding. But you can see here's 9-9 right there, and they're just little bitty bumps. That's it. And sure, I mean, compared to the 5th, right, to today, because it's a Friday and there's a lot of things expiring today, we got a lot of stuff today. If we could scroll it just a little bit, or we could remove that, then it would normalize these other. But the next bump, even remotely close, is the next OPEX, which is the 19th. It's not even really registering that there's anything on the 9th or the 10th at all. Just a little bump. So I think the market's going to get caught flat-footed on that one. And it doesn't even sound all that big of a deal, right? Like if you're reading through it, you're like, yeah, that's boring. It put me to sleep. It's like watching grass grow. This does not seem like a big deal. But the more you think about it, you know, think about Trump fired the BLM lady for not adequately expressing the revision. This is a much bigger change in how the revisions are even done, right? They're going to change the entire system because they say it's a more comprehensive data source. So we'll see. But, keeping your eye on upcoming events is always a really big deal, especially if you're trying to swing trade, but on a day-to-day basis too. Right now, this is one example in the article that I wrote that's on my website that I was talking about a few minutes ago. There's these other events that are really handy to keep your eye on, and it's more of economic events, not economic, corporate events. So Apple, for an example, has an event September 9th, same day. And 5 years ago, when Apple would have an event, it was a big deal. Like, everybody was watching, and the stock would get a little bit of a bump. In the last few years, though, it's really been a dud, right? Like Apple just their Siri is so broken, such a piece of trash that it's just a joke, and they fail to come out with any new product of anything that excites. So it's been a big dud. But this year, they're talking about coming out with an entirely new thing, and they're going to be doing that on the 9th. While at the same time, on the 9th, they're going to be acknowledging that nope, Siri's still a turd and we haven't fixed it yet. So that may counteract each other. But Prime Day events, the big Apple event, Google usually has a couple of events every year. You want to know when those are coming, right? You don't want to just show up one morning and be like, wow, look, Amazon's up 3% in the pre market. I wonder what's going on. Ah, you missed that opportunity. Everybody who was looking for those events, knowing that they cycle around every single year, they were already ahead of you, right? By the time the market opens, you already missed most of that move. The 3%'s like all we get that day, and then we don't get anything else, and you didn't get a chance to participate. And since they cycle around, they just keep coming back again and again and again. You want to have them on your radar. I don't know that you could really build a list, right? At least it would be an exhaustive list because it seems like most of those companies have that sort of cycle. Then there's other ones like the auto report. Those directly affect Tesla or the other ones, Li Auto, Neo. Get ahead of that report. Or when Tesla comes out and does its extra report on its car sales and car deliveries, that event just cycles around. So any stock that you're thinking about trading, one of the things you want to ask is, what's the widget? It's the word that I use, but every stock has a widget. For Netflix, it used to be how many subscriber numbers they had got from one quarter to the next. Then they stopped reporting their subscriber numbers in their earnings and they took that widget away. But every company's got a widget. You want to try to ask what's their widget and when are they going to report it? And is there any ancillary outside reporting that's going to come in along the way? And it doesn't have to just be the big dogs. Target, for an example, announces in October what their Thanksgiving, Black Friday event, and Christmas sales are going to be, or the projections of those sales. And they report what they actually got in January. So if you're trading Target, Walmart, Costco, BJ's, those guys, you really want to have your eye on January for that report. Because if they miss it, and if they miss it by a lot, you're going to see it, right? And those are just like simple little layups that you get on the basketball court if you know they're coming. So you got to think, what is the product that I want to trade and what's its widget and when does it report things that may be beneficial outside of earnings, because those are the everybody knows the earnings, but what else you got? Big conferences like AI conferences, pot stock conferences, anything like that. You want to keep your eye out for those too. Drones, big meetings in the airlines. It's an endless, exhaustive list. I'm a little concerned that we didn't run back to that half. And now we're getting these lower highs and lower lows, and they may wash it, but it's so late in the day and it's so late in the week. It's like where are you gonna go? Yesterday's low, we were already there. I guess yeah, it was supposed to be stagnant, but it was to me, it would make sense to get back up to that 88 and then just have, 44 to 88, and that would be our range, and we go into the weekend. And it tightened up too much. So we were running from 80 to 60, and that's just a little too tight. We'll see. They may be able to pull it off. Quiet into the close makes perfect sense. Did you run it with strategy or did you run it with indicator? No, I was just curious. If you run it under strategy, it'll show you where the touches happened. So then you can, download it into a spreadsheet and put it into a Excel, and you can really get the numbers, right? What I'm showing on my screen is a Thinkorswim strategy with the P&L down below. I just randomly picked a strategy. This isn't mine. It's called the Gandalf time gain. That's so funny. I'm a nerd. I can't help it. Gandalf is the wizard if you're unfamiliar with the name from Lord of the Rings. I didn't name the strategy. I just found it in strategies. The Gandalf Project Research System. It's got a really nice P&L to it. Looking at a 5-minute chart on the SPX, we went to $50,000 by the end of a 5-day trading period, 60 6-day trading period. That's interesting. Looks like a scalper playbook. And it is a mean reversion play. That's interesting. Somebody developed a mean reversion trade strategy and stuck it into Thinkorswim, and it runs. Well, we can obviously see it. It runs intraday pretty good. The question is, when you run across these strategies, is it time dependent? I'm on a 5 minute and it worked really good. Would it also have worked on a 15 minute so far? Yeah. On a 65 minute? Yeah. Daily? Yeah, not as good, but still profitable. I think I liked the 5 minute the most. Yeah, no, it's because a lot of those systems use candle close for the trigger, and that leaves you sitting out waiting. If you change the time frame, you're in too early, and if you change it, the other direction, you're in too late. So they are time frame dependent. And that's why, as traders, I've always argued that waiting on candle close should not be your default scenario. It should be, well, what am I trying to do? Right? Because if I'm trading a candle pattern like a 3 bar reversal, it's not a 3 bar reversal until the third candle closes, right? I can't get in early because the candle hasn't closed, so I don't technically have a 3 bar reversal until it closes. I have to wait. So if I'm trading a doji, a 3 bar, a morning star reversal, I have to wait for candle close because it's not valid if I don't. But if I'm just trading a pivot point, a breakout, something like that, why in the hell would I wait for candles to close? I want to trade what I got, not, wait for confirmation because you pay for confirmation. I'm going to have to dig deeper into this Gandalf thing later on and see what it is that they did and poke anything out of it that I might like and save it for myself for later. Seems to be a lot of turnaround in that thing. What I found with strategies like this is that it'll trigger and then it'll just get right back out again if what it was looking for didn't happen. And so you'll find a collection of signals where it was in, out, in, out, in, out, in, out, in, and then it held through a move and then it was out again. And then, same thing happens in, out, and out, and out, and out. And then it'll in and it runs and then it finally exits. When it comes to backtesting stuff, uh, I really like backtesting options plays, especially if they are mechanical options trades, like getting in on Tuesday just because it's Tuesday. But with Options Omega, which is like the best backtesting options platform I've ever come across, it's very limited because it doesn't allow me to backtest the things that I want to backtest, like weekly expected range, for an example, or floor pivots. It wants to use things like moving average crossovers and Bollinger Band breakouts or IV levels. And I'm sure those are applicable studies. They're not what I'm looking for. When I first got into trading, I found out that Thinkorswim would allow you to create bots that would trade for you. And I was very excited about that when I first learned it. So I learned how to code because I was trying to build a trading bot. And I spent, well over a year learning how to code Thinkorswim so that I could develop this bot. And then after all that work, I found out that it was for stocks and options. It was not for or stocks and futures, not for options. And that's what I had built it for, was to trade options. I was very disappointed, but it works just fine if you wanted to do stocks and futures. I haven't played with it for a while. Uh, Looks like it needs adjusted. Yeah, I think they did. Um, I really don't know if it works or not. They made some radical changes when they took over. Like they don't run any margin now for futures. I like if you wanted to trade on Thinkorswim before Schwab bought it, you needed 25% of the daily margin. I called them up and they're like, "No, we don't offer that. If you want to trade futures on our platform, you need to have the margin for that contract." I'm like, "You're not offering day trade margin?" Nope. So if you go to futures and you scroll back to like the ES, it's what, 36,000 or something? Where is it at? 24. Yeah, if you want to trade futures on TD Ameritrade, you have to have that initial daily margin. They don't offer any halvesies or quarters. Like that's cold, bro. You know, they don't want your traffic basically. They want the institutional traffic, not yours. It is a very comprehensive platform, but you are absolutely right. It's like starting from scratch. Because I have coaching clients from Canada and they're like, "I'm trying to learn options, but I use IBKR and everything that you talk about on Thinkorswim, I can't figure out how to do on my platform." So like, all right, well, let me go get an account at IBKR so I can figure out how to explain to you how to do this stuff. Well, I had to learn it before I could teach them how to do it. What a mess that platform, but it is robust. If you know how to use IBKR, it gets everything done that you want to do. You just have to figure out how to do it. And I still have the accounts, but I never log in. And of course, if you don't, I don't remember anything that I learned over there because I learned it to get the job done, and then that was it. I quit using it again. So stats, it's funny. I was talking to somebody this morning about the call out for the reversal at the high of the day, right? Because I called that reversal out before we got there, and I was using a half number. And so someone reached out and messaged me and said, "Hey, what happened to the 1, 2, 3, 6 and the 1, 1, 1? Why are you using halves and wholes?" Because I said if it overshoots half, it's going to go to whole. And they're like, "What are you talking about? What about the 1, 2, 3, 6?" Like, this is an economic candle, and when you measure an economic candle and then you try to project the breakout of it, you have to be prepared for price to go a lot farther than 1, 2, 3, 6. It has all that excitement built into it, right? All the fear and the rage, and it moves. So 111 and 1, 2, 3, 6 will get run right the heck over. If you're measuring an event bar, like the 830 candle that we had today, then you project 50% and 100%. And where we reversed today was 50% of that event bar. And they said, well, how did you figure that out? Well, because I went back and looked at event bars and I measured them. Went crawling back through CPI, PPI, and non farm payrolls and finding these really big prints and then figuring out how far price moved when we got outside of them. And what I found was 50% and 100% were really amazing levels to pay attention to. I didn't run a code for it though, right? I didn't build a program to go back and do the work for me. I went back and studied every one of those events that I could find and, what I say, put my hands on it so that I could get a feel for what does it look like. I'm kind of a hands-on person. I need to grab a hold of the data, and physically turn it around, measure it like get, just got to grab a hold of the dang thing. That proved itself really well today. That's an awesome example. It's going to go in the books. But we knew it wasn't going to be a gap close trade, right? Which is really good to know because that really big wick down at the bottom told me right off the bat this was not going to be a gap close trade. And I ended up taking the short. I don't usually trade between 9:30 and 10:30, but it was a gift, so why not? If you were trying to trade this today and you struggled with what we call one-time framing, it's these single color bars that just kept going for over an hour. The issue is a lot of traders will get stuck on one time frame. They will tell me, "Oh, I like to trade the 5 minute or the 2 minute or whatever your number is." That's the number they like, and they don't jump around because they've learned that jumping around doesn't help them when they're doing their analysis. So they get stubborn and they say, "No, I just trade on this one time frame." Well, on this one time frame, you would really struggle to try to find an entry. I can see a couple entries, but other than a couple, I really struggle to see where the hell would you get in. So you have to be prepared to change your time frame if you anticipate this sort of market behavior. I don't like doing it all the time, but especially after like the third bar and it's still going in the same color, hey, we're one time framing at this point. You're probably going to want to swap your time frames if you're going to get an entry. So at that point, maybe you could try to go to a 1 minute. I'm not a fan of trading on clock. I'd rather trade on tick, but there's the 1 minute as it was falling. And I think there's some entries in there. Reasonably decent setups to take. At least now you've got opposite colors and some pullback. But for me, it would be dropping out to a tick chart. So there's 1000 tick. And we'll just mark the open. So we had the stall sideways and then the breakdown and the opportunity to get in along the way. Everything that we'd already been talking about with ranges and pullbacks and measurements, you can apply it to this all the way down because it works on any time frame. So from there to there, now we can put the 111 and the 1236 back on. This is what I measured because that was the range. And then we got the breakdown into 1, 2, 3, 6 with a really nice reversal pattern there. A retest of the 7, 8, 6, and then down we go. And then we got a Busby, but we had already hit the 1, 2, 3, 6, so we could expand it down to the new level. We failed to get through the 7, 8, 6, dropped down, made a new 1, 2, 3, 6. So you can update it again. Test of 7, 8, 6 after failing at the 111. I mean, it's textbook, right? Beautiful. We 7, 8, 6, hit 111 and rejected up to new 7, 8, 6, 2-bar, Pinocchio, whatever, not tweezers, down again to 1, 2, 3, 6. So we could update it again. And it didn't even hesitate on that one. It just paused and dumped down into another 1, 2, 3, 6. 7, 8, 6 pullback. Checked at the 111 and just couldn't get through until finally it did. On and on and on. And at any time during this sort of behavior, if it starts to stretch out too far, you can move the top end down and you can start all over again because it's adaptable. So that hit 1, 2, 3, 6, and we got an opposite candle color. Let's zoom in there. See it hit, and then your OCC is there, so you could update again. On and on and on. It works. Same thing. We hit, got OCC. Move it again. So it's pretty cool. And if you wanted to update it, you could do that too, so that it doesn't get too stretched, right? Keeps your time frames smaller, or your targets and distance and pullbacks smaller for your scalper maneuvers. So we could like tighten it up to this last one and keep running it. I mean, you got to admit that's pretty cool how it's self-adaptive or user adaptive. Anything you want to do with it, you can do it. And there's 2500 tick. Same thing. 930 open. We went sideways. Then there's our range. And then we started the breakdown. I like trading on the tick chart, but TradingView doesn't have a tick chart unless you pay the next higher level. Like I've got seconds based charts, but I don't have tick charts. And if you're trading it on TradingView, add cumulative delta. It's a game changer. So next week, we need to see how we're going to open. This is a really good fake breakout fast failure example, right? It's, if you study the daily chart, candle by candle by candle, you find these sort of setups. Like back here, we had closed there, and then we opened, gapped up way up here, and immediately dumped all the way back down to the previous day's low, and then dumped again and closed not at the low, but in the lower half of that bar, 50%. We were underneath that. That's a heck of a move, right? Well, same thing here. We closed here and then we opened way up here and we dumped down and we're not at the low yet, but we didn't make it back above half today either. And it does indicate more low on Monday because of that, but not as bad as this one, right? This one really closed at the low and indicated more. This one's at least up off of that low some. If we closed higher, like this one, it would indicate perhaps that we could go up. It didn't work on that day, right? We ended up the next day being lower, but those reversals, if we leave that much behind, a lot of times we continue that move. So it would be better for us if this today's bar would get back above that half. And maybe it will in the next 45 minutes, right? I don't think it will, but it's possible. Either way, even with that fake break, fast failure, it still gave us a new high. And that is what matters because now we still got our higher highs continuing and we've still got our higher lows. On the week, we've got a big outside bar, and that is a mark of indecision, but it's a green outside bar as opposed to this one from July 28th. That was an outside bar, but it was a red one. And we'll see how we close, but we were IX10 inside of this bar. It's one thing about TradingView is it hides the bar when you draw. We'll do it that way. That way we can see it. We were inside this bar. Last week we closed inside of it. Depending on how we close this week, we might be closing inside of it again. That that I'm going to use that for an example. I was looking at Tesla and I tried to put on an iron condor yesterday. I didn't get filled because I didn't want to take less than $2 for my iron condor, and so I don't have the trade. But um, I was looking at it on the daily, and you can see what I've got marked here. But I'm going to go ahead and delete that for a moment. This is what we have. And if you're looking at this on Tesla, other than today, right? Because I was looking at it yesterday. If you're trying to figure out what am I going to trade with this thing, what do you measure? What do you mark? And so I was looking at it and like I don't really know, right? Like on this chart, on this time frame, there's not a lot. I like this really big bar, but we're not down there, right? So that's not going to be helpful. And I like this whole range, this big entire range, but that's way too big of a range for an iron condor. I don't want that. Plus, is that really representative of everything that's going on? And maybe should I perhaps use a this smaller range? So I was looking at this, I was trying to think it over. I'm like, I don't know. I don't really like this. Let me try to find something else. So of course, when I run into that kind of issue, the default solution for me is go to the next time frame. From a daily, I just step up to a weekly. And it stands out really obvious to me as soon as I got to the weekly. I'm like, yep, there's the solution right there. It's this really big bar from June 2nd. That's the control bar. That's the mother bar. Everything else is inside of that. That's what you want to measure. Well, at least that's what I wanted to measure. So then I snapped my fibs on that thing, right? Make sure I got. Now I'm going to make the box just one size bigger so that we can see the red bar without lines on it. But that's the bar that I wanted to measure. That's where the control comes in. So let's get rid of that yellow line. Now we just have the box. Put the fibs on that. Now we've got a better idea what we're working with and what we need out of price. Price needs to get the heck out of that box. It was on the weekly. If you go from the daily to the weekly and you still can't find what's in control or a way to analyze the market, go to the next higher level, go to the monthly and see what you get. I've done that and had to go all the way to a quarterly before. I don't have to do that very often, but if it's just a really nasty chart, you got to find something, right? So I just keep looking until I find it. And for me, I on Tesla, I found it on the weekly. And I remember thinking yesterday, I might have to bring that up today, because it's just a really good example that you got to keep hunting until you find what you're looking for. That bar is the bar of control, right? Sometimes you won't find an answer. I mean, I wish I could tell you differently, but sometimes there just isn't an answer. And that's an answer too. Stay the hell out. Go leave it alone, right? Go somewhere else. If you can't find it, then just you don't want it. But usually you could find the answer. And for the bigger picture, that half is what we're fighting against. So it's not just this one red bar. It really is the half back of this broader move, and it's the top of that big red bar. That's double level resistance there. If we do break through that, we're aiming for these highs. You just got to remember that, yeah, absolutely. The the idea in science, in photography, mathematics, and I remember they were talking about this computer program that you could take a picture of a leaf. And if you zoomed in on the leaf, you would see that it had a main stem and a trunk like a tree, and that it had branches off of that main stem like tree limbs. And that if you zoomed in on that, those limbs became the main trunk, and that it had branches off of it. And then if you zoomed in on that, it just kept going and kept going and kept going and kept going. But if you zoom out from a leaf, you end up, getting the tree, right? So Fractal is really awesome, and they've been trying to code that into photography software for like 2 decades now, so that if you was to take a picture and try to zoom in on it, it don't pixelate on you. With this, the high that I was talking about, getting back to the high, does not mean the very peak up here. It means getting back to where all those wicks are up here, because we don't know, you know, are we done with those sellers or are there still more sellers up here? We don't know. 440 would be my target if we can get this breakout. That's a 90-point run from 350 to 440 in Tesla. I was trying to put on an iron that was going to play the wick down here, this little wick. Hey, give me my box. And the reason that I was going to use this wick is the expected move. So Thinkorswim has expected move, but it doesn't, the visual just isn't as good. It's much better on Tasty. I'll show you both. I think I missed a letter. Nope. All right, so on Thinkorswim, the expected move for a particular stock is under the options analysis tab. It's not necessarily for the visual, anyways. It's not necessarily in the all products tab. So if we go into Tesla, come on, Thinkorswim. It froze. You can do it. There it goes. Wakey, wakey. On the right-hand side, we can see the expected move right here. So if I want an iron condor for September 19, 14 days away, I can choose that one and look at the expected move. It's $28 round up. In fact, just round up to 30 because 28 isn't going to do you any good. So $30. We're at 350. That makes 380 on the upside, 320 on the downside. And there's your iron condor. So let's sell the 80, buy the 90, and we need 20 on this side, and it's not showing. So I'm going to just pick two numbers and then we'll move it. I forgot to hold the shift key. Dang it. All right. So the puts are supposed to be 20 and 10. It's easier for me to do that than it is to just add more strikes. But, we could have just added more strikes. This is a $10 wide iron condor, and it's based on the width of the expected move that was up there. We put it in the risk profile. The gray area here is the one standard deviation. And on the options tab, that was the expected move. So it depends on what you want, right? So here's the probability range, one standard deviation. It's what we've got. Chose 68% chance that it'll close inside this gray box. And the options are saying, yeah, no, we're coming up a little short. But we got to look at the date, 9/20. And is that what I had? Turn that off. Yeah, 9/19, 9/20. That's what I have too. So the dates match, and the one standard deviation says actually Tesla can go farther than what I've marked. Okay, we can take it anyways. We've got a little bit of edge, perhaps. If this is what Tesla's supposed to stay inside, then we could put our trade on. But there's a lot of risk here, right? We're only collecting $2 in a $10 trade, so we got $8 of risk. You have to be pretty confident in this trade to want to risk 8 to make 2, especially if you're not even going to make 2 because you're going to close the trade early. Individually, we could probably calculate the chances of success on this. And I've done videos on the Bullish Bears website to give you a higher probability model, but take each side individually and just use the delta. That way you can say, well, on the downside, what's my chances of losing? Because only one side can lose, right? We've got the 380, so we've got a 20% chance of ending up in the money, of losing on the call side. And we've got a 16% chance of losing on the put side. It's a pretty good number, but are we getting enough credit for the trade? And if it doesn't work, what can we do to fix it? If we get run over to the upside and you can afford it, what I recommend to do to fix an iron condor is buy the stock. So I'm going to buy just one share and show you what that does to an iron condor. You see how it kicked the whole thing crooked? That's just one share. So obviously, if you bought a lot of shares, it would fix it faster. But let's just do 10 shares. That radically altered the upside, and it got rid of a lot of that risk that was here. There's still a little pool of risk, just a little bit of it right there, but it's less risk. It's not $10 anymore, right? It's much less. But if the trade fell out on the downside, then buying stock won't fix it, right? That's just going to make it worse. Still, I did find that interesting a long time ago when I figured out that buying stock radically alters the shape of the iron condor. So what you do is, if you take this trade and Tesla falls to the downside and breaks your expected range here, your break even, don't move those puts. Leave them alone. They're losing, and trying to fix those losers is going to cost you a lot of money. These calls are winning. Take those calls and roll them lower. So you sold those calls to open. They're paid, right? They're like 80 plus profit already if it broke that far down. So you close those in a roll and you bring them down, say to the where the price was to begin with, and you get more credit. You're just collecting credit to open the trade again or to roll it. And while you're at it, if you wanted to narrow it because it was 10 wide, maybe you want to reduce some risk and make it 5 wide, but you can keep it 10. Just get more money from those calls and roll them down. The money that you get is to help offset the loss that these puts are giving you. And if it keeps falling, then, bring the calls down some more as you go, but try not to move those puts. You can do the same thing the other way, by the way. Roll the puts up if the calls are getting challenged. Iron condors are a really popular trade just because you can identify ranges and play it out. But if you can put free iron condors on, you'll really start to grow a whole portfolio of trades that are just sitting there in profit that can't lose. Free iron condors, no risk iron condors. They start with the at the money credit spreads that we was talking about. Try to put them on where you have half the width of the trade in credit, and then also lay them against the highs. So this isn't perfect, but it'll work. We're going to use Tesla and say that we're going to try to fill at 350 for half the width of the trade in credit. So 350 is just out of the money. This example won't be perfect, but it'll work. Sell calls there. And we don't want September, we want October. We're getting 240. It was 245. Now it's 245. We would work that order and try to fill for 250. Now we've got a call credit spread with half the risk in credit. So we'll just set it at 250 and we'll throw that into the analyze tab. Hide this other one. And that's what we have, right? We got half the iron condor. What we're looking for is for Tesla to fail here and fall down. And then later on, we put on a put vertical down here when price is, say, at 330 or maybe lower at 320. And we get half the width of the spread when it's down there too. So it's not there, but we'll go ahead and build one at 320 on the assumption that, price gets down there. And we'll make it 250. And it doesn't even know what to do with it, right? It's just like, what the heck is this? And it broke. But turn one off. There's the put side, and it's perfect, half the width. And then there's this side, and it's perfect, half the width. But the machine doesn't know what to do with it because I'm cheating on those puts, right? Because we're not really down there. So the machine is like, what are you doing? It's broken. But if you did put that on, then you would have an iron condor that would look like this. only it would be half the width, right? So it would look actually like that. And it would be a no risk trade because it would be paid for. If the calls run, the puts cover it, and all you pay is commissions. And if the puts run, the calls cover it, and all you pay is commissions. And since we're talking about putting the trade on at two different times, the calls today, the puts maybe a week or two from now, you can actually lay out different expirations. October for the calls, December for the puts. And that way, say we fall down here, you open up the puts at 320, then we work our way back up. The calls are closed at that point, and then you get to put on a new set of calls up there. Um, it's a layered vertical strategy. You wouldn't want to tell the broker that you're going to leg into an iron condor. You would just tell them that you want to layer on verticals, and that they would understand. When it comes to videos on fractals, I learned about fractals from a science class that I took. Right, it was a 6-week class on science. Um, it had nothing to do with trading. I I have since brought it into the trading world myself by hearing others talk about fractal in trading and by going through charts and that sort of analysis. Price is fractal, right? So if you want to understand fractals, start on the science side. But the idea is if I took the numbers off of the side of this chart, right, you can see where the price action is on the side here and time on the bottom. If I removed that and the only thing that you saw was the candles, you couldn't tell me what the time frame of that chart was, right? Because the daily, the weekly, the hourly, the monthly, the minute, 30-second, 15-minute, it doesn't matter what it is, it all looks the same. And if I zoom in from a monthly to a weekly or a weekly to a daily and a daily to an hourly and to 15 and to 5 and to 1, it no matter how small I go, it just keeps looking like price action, right? That's fractal. So in science, if you look at a tree out in the yard, it has that big stem in the middle, the trunk of the tree, and it has branches. Well, walk up to that tree and put your hands on just one branch and look at it. It's the centerpiece, like a trunk, and it has branches. You can keep doing that all the way down to the leaf. And then if you look at the leaf, it has a central main trunk and it has branches. And if you zoom in on those in the leaf, get a magnifying glass out, there's a main trunk on those and it has branches. Fractal. The smaller you go, it's still the same thing again and again and again and again and again. That it doesn't matter. Fractal. So with the legged in iron condor, if I collect half the width here and then half the width here, no matter what happens to the trade, I can't lose. And the fun part is you can put it on at any time, right? We're not putting it on up here. We're actually trying to put it on there. And we wouldn't need to go all the way down to the bottom here. We could put it on, somewhere down here if we needed to. If you open your iron condors by legging in and you get half the width of the spread, you can open them anywhere and leg into it. That's why I like having verticals. If you open the vertical here, half the width of the spread, short puts. And then we run up and reject that, and you think, oh man, that's all I'm going to get. Well, heck, I might as well just open up a call vertical up here, short call vertical. You just legged into an iron right there. Now this put spread that you're holding is risk free, can't lose, and you just added another trade with more credit right there. It's just more money. We could fall back down and then you open another one down here more money, just collecting more credit on a trade they can't lose. I love those trades. But then you end up with 100 and something trades in the portfolio because they can't lose and there's no reason to close them. And you're just like, whatever, I'll hang on to it. And then people freak out and say, what? You got 100 trades on. How do you even keep track of that? Oh, I ain't keeping track. They can't lose. I don't even look at them anymore. Yeah, technically, if they go in the money, you have to have some alert on there, right? To make sure that by expiration they are still out of the money to avoid closing in the money and getting assigned. Well, let me put a caveat to that. Um, Somebody can exercise their option at any time, so you can still get exercised, but it won't be an at expiration. I was in the money and forgot to look, right? That's what you're talking about. Having that MOC on there guarantees that as long as nobody exercised early, your trade will close before it expires. And so it won't be in the money on expiration day because it'll close. Like you're saying, before the market closes, your trade will close. Yeah. But you can't avoid assignment. If you've got a short leg on, somebody who bought that can exercise their right at any time. And there's nothing you can do about it. It sounds scary, but um, most assignments happen within the last 3 days or at least in the last week. So if you're swing trading and you get out, with 10 days or so, you're good. And even if you do get exercised, the broker's going to reach out and ask you some questions, right? They're not going to just like hammer you. And a lot of brokers nowadays, they actually warn you in advance. They'll send you an email that says you're at risk of assignment with this option. So like if it's really deep in the money or something, they'll warn you and say, "Hey, this one's at risk. You might want to close it." Tasty does that. Yeah, it did almost make it back, didn't it? Just a wink and a nod. Not bad. Don't you love that? If you measured the range that we've had since lunch, the breakout went to 1236 because it's all fractal. There's the 111 reversal. So next week we might get some shenanigans, right? On the 9th, we got Apple's big event, which I mean, they they tried to hype it up. Bloomberg has an Apple specialist that they like to call on when they're going to do talks about Apple. He's the guy that comes on, and he was trying to make it sound really good. And then one of the guys on Bloomberg was like, "So, are they going to make radical fixes to Siri?" And it was like crickets chirping. And the final answer was not this year, maybe next year. I don't know if you guys are Apple users. I am. I've got the watch, the tablet, the phone. Right? I'm a believer, but I use Google for the Google Dot. The Alexa product, and yeah, I don't use Siri. She's broken. So maybe we get something out of Apple on the 9th. I'm not expecting anything though. I don't know if you guys have seen me use it before, but there's a company called TipRanks, right? And the idea behind it is there's all these analysts out there, and a lot of analysts are just paid mouthpieces. They get paid to talk good about a stock or to talk bad about it, to give really good price recommendations and to make it a buy label or a sell label. And they're just Muppets, right? They're just paid to talk about something, and you can't trust a damn thing that they say. But then there's other analysts who have a reputation and they want to defend it, and they will work very hard at defending that reputation. They'll only give recommendations on things that they believe, and they really try to keep their track record intact. So a while back, a company decided, we should rank these analysts and see which ones are just talking heads and which ones are real good analysts. And so this company was developed called TipRanks. And you can go in and you can find people and see their success rate. How often do they call a price target on that particular stock? How many times are they right? How many times are they wrong? What articles have they wrote about it? It's it's not a bad website, all things considered. Me, I like doing my own analysis, right? But if you're looking for the consensus, it's not a bad way to go. We've done videos on this. We've talked about it before. Um, is pretty cool, all things considered, right? That there's these places out there where you can get a collection of consensus on buy ratings, sell ratings. What I like when a company puts out a buy or a sell rating, I like them to tell me why they did it. And if the answer is just, oh, I really like the stock and blah, 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 what? Shut up. I don't want to hear that stuff. Give me a real reason. Why do you want to buy it? Why do you want to sell it? Why do you think it's a good company? And some of these analysts, they do a really good job at that. Say this company came out with a new product and they have a huge moat. Nobody else has this product. Nobody else knows how to make it. It is a unicorn in its own space. Yeah, that sounds great. That might be worth checking out. As opposed to, well, we got paid a lot of money to talk good about it, so we're going to tell you it's a buy. Yeah, no, thanks, but no thanks. So then you find these analysts that really pay attention to their rank, and they're going to defend it by giving you good ranks. And you can watch for those analysts to put out new recommendations on stocks, not for you to just run out and buy or sell whatever they recommend, but it starts your due diligence. You hear that they're interested in, I don't know, Home Depot for whatever reason. Then you can go look at Home Depot and see if you like that one or maybe you like Lowe's better. But if one's going to do good, you know the other is going to do good. Some of them are consistent, like Apollo or well, what's the other one? Like Goldman comes out with a bunch, but you can't trust Goldman's. They're I shouldn't have said it that way. There's some at Goldman you can trust, but if it's the Goldman announcement that you see on Thinkorswim, he's just a paid talking head. Let's let me get that to pop up here on Thinkorswim. This one. Don't take this one just because it was a Goldman Sachs thing, right? And down at the bottom, yeah, they're not even giving credit for it. So when you see those kind of pops up and it just says Goldman is blah blah blah, that's trash because they're not naming the person at Goldman who made that conversation. If they did, read back and try to catch it. But there are companies out there that have really good analysts doing work, and when they give a recommendation, they give a background behind it. Something changed within the company that makes it a good buy or a good sell, or they think it won't grow, or they're going to come out with a new product. Maybe they're going to dilute their stock. And we used to have a company that would do hit pieces. It was called the Hindenburg Report. And man, they could tank a company with one article. If they came out with a short report on a company, that company got beat down. And now the Hindenburg is gone, and others are trying to step up and take their place. One of the last hit pieces that I traded from Hindenburg was this company called EDU, and they gave a short report right there. They had done this is a Chinese education company, like they did this big report, and they found out that this company had been really slacking. The parents were pissed off and they were shopping around for a new school, and a new school had opened because these guys were just slacking so bad and not getting it done. And this analyst found out about it, did a bunch of work. They put out a hit piece on him, and that thing just tanked. But on the day the report came out, it came out at like 2 o'clock in the afternoon. That thing got hammered, man. It was bleeding that day. The right before Hindenburg closed, I think they did one on it was a tech name. It wasn't PLTR, but oh, shoot, I can't remember the name of it now. But they kept having financial issues and they got delisted from the NASDAQ or they were threatened to be delisted and then they got really close and they got back. It was like maybe it was CloudStrike or something. Was it CrowdStrike? Might have been. They just closed up. They said they had enough because you got to remember these guys, they always took heat, right? Like whoever they did a short report on, they would be like, come out. Yeah, they would come out and say, I'm suing you. You can't say those things. It's not proven. And they're like, we stand by our report. So they were always in trouble. And they finally just said, I'm done. And they just closed up shop. I can't remember if it was CrowdStrike or not, but they are done. And now there's other companies trying to take their place as the new um, hit piece company. I don't think we have a dominant winner yet, though. It wasn't Crowd. Shoot, who? Maybe Google or maybe Grok knows. we'll just set that aside and let it work. We'll see what the answer is on that. And then I'll ask him who the new one is because there somebody just this last month put out a hit piece and they did a pretty good job. And for the life of me, I can't remember the name of the company that's doing the hit piece. Okay, Hindenburg Research shut down in January, so the hit piece had to have been last year. I'm gonna have to retype the question because it's already saying, it closed in January. There wouldn't have been any hit pieces in January if it closed in January. Okay, so I adjusted it for 2024. Now we'll let it run. So it wasn't CrowdStrike, but it was a tech company, fintech, I'm pretty sure, that had irregular reporting on its financials. And it wasn't the first time that they had gotten caught. And they just swore up and down, we are not doing anything irregular. But we are also now going to push back our earnings announcement. We're not going to do it on the date that we said we were going to do it because this report came out. It was really funny. They were caught red-handed and they were really upset, saying, "You can't say those things about us in public. It's not proven. That's a rumor." And yet, at the same time, they said, "But we're not going to report when we said we were going to report. Now we're going to have to push that back a couple months." God, I can't remember the name of the company. So the idea is, whatever company it is, there is um, analysts and companies out there that are useful. It might be SMCI. That some of these analyst companies out there are really useful is the main point of where I was trying to go with this, and that don't dismiss them just because you hear, well, it's an analyst. Some of those companies are really good at what they do. Thinkorswim's news only goes back to August of this year, so I'll have to use the web to get the answer on that. But you know what? SMCI sounds right. It might be. It looks like it's, yeah. Look at that hit piece. Woo. If that wasn't a hit piece, then it was just a bad coincidence in timing. You guys think that there's anything left in the UFO stocks for 2025? UFO? That thing just keeps going higher and higher and higher. And every time I think, nah, it's probably done now, it just keeps going. Just keeps going. Since April, since the president capitulated and flipped over, that thing's been on a tear. It's almost doubled from 18 to 34. All right, it's coming out with a list now. We'll see what the name. Wow, it's being comprehensive. There's like two in February, two in March, one in June, August, two in August, October, November. SMCI, August 27, 2024. Sure was. Good call. Jim, you nailed it. Oh boy, look at that, huh? August 2024. It was this big dump there. It wasn't even off the top, right? It was way down here after their stock split, maybe. All right, August, that's back here. Before their stock split. Nice 3-bar reversal, too. Good leg down. So here's the list, by the way. Roblox. I didn't know Roblox was on there. SMCI, Equix, Bioscience Company. Yeah, accounting manipulation, undisclosed related party transactions, sanction evasion. Oh man. Product quality issues amid rapid AI driven growth. So, um, I've been keeping my eye out looking for who's going to be the next company to be the hit company. We'll see if there's any takers. I've got someone else I want to ask because she's really good at that. I think she might have an answer. I'll get back to you guys on that one next week. She's already gone for the day. She ducked out early this morning, but I got a friend who's in that. She loves shorting companies. She shorts with stock though. I'm not a fan. I'd rather use options. To each their own. But yeah, I think she's mentioned some company in now a few times, and just I can't remember. We'll see if AI can find it. And I've got a product review launch coming. Um, I think maybe you guys heard about it with Kevin. He might have been talking about it in his stream. But there was a company that had reached out and asked if we wanted to review one of their computers. So the company is this company here, Velocity Micro. You'll be hearing me talk about their computer because they're shipping one to me. And their whole spiel is that they design computers for traders. This is one of their low end units, not their high end system. Computers for traders. It's designed to handle a lot of data. So CAD developers or video streamers, um, AI coders and developers. And so they said, hey, we would love it if you would review our product. So we're going to ship you our product, you use it, and then give a review. And the one that they wanted me to review, well, first, we just look at some of their desktops, professional workstations, right? So we just click on that one. They have powerful workstation computers, professional workflows, 3D animation, media, VFX, creation content, calculation, scientific computing, AI, right? And then these are their models, but you're looking at like $6,500, $6,300. Well, if you keep scrolling down, you get to, $2,100, 22, 1700 on the low end. And this one is what they're sending me. I believe this is the one they're sending me. The Pro Magix Trader Pro. I've argued from day one that you can buy a computer off the shelf at Walmart and it'll handle what you throw at it. Because most people I know, watch maybe YouTube and have a broker up, and chat on Discord. That's it, you know, if that. Whereas I'm running two desktop computers at once with one keyboard and one mouse controlling both of those full size desktop computers. Four brokers. Used to have six screens. I'm down to four because I just really wasn't using the other two, but I was running them for a long time. Where I might be recording and having a video playing on YouTube while I'm rendering content from another stream, five or six different social media platforms, Discord, Teams, Slack, and then something like Twitter, Facebook. Nah, not really. Just um, you know, at any given time, I might be in crude, oil, or crude and copper with some gold on the side, and then maybe I'm in the SPX and I'm in the Qs, and then I'm shopping around for an NQ trade while I'm looking at what's going on in Apple. There's days where I'm in eight or nine stocks all at the same time. Some of them in options, some of them not. And I'm juggling the roll on them and got to look around to see what's going on, you know? So the answer for the replacement Hindenburg, it took a while. It did a little bit of research. Spruce Point Capital is somebody that I've heard a lot about this year. Whether they are going to be the new dominant Hindenburg replacement, I'm not sure, but that is the one that I was thinking about right there. Spruce Point Capital. Muddy Waters and Citron. They just put out a hit piece. Citron did um, last week. Shoot, who did they put it out on? Palantir. There it is. Yeah. They are responsible for that flip on Palantir. That was Citron. So not all analysts are, worthless. There's a couple of companies out there that have their niche specialty and they are really good at what they do. But you can't lean on that every day for a trade, right? Because you're not going to have them every single day. The If you scroll back, Hindenburg was hitting on average two a month, but there was a lot of months where there was only one report, and it doesn't even mean that they're all in the U.S. like this one. I think that's a Canadian one. No, Kazakhstan. Oh, that's not. I'm not trading theirs anyway, so that wouldn't have bothered me. I don't know what nation that is, but that's another one that wasn't in the U.S. So you can't bank on having one of those all the time, but it is nice to have a short report, have an eye out for short reports because they can provide an opportunity for a trade too. At the very least, they can make sure that you get the heck out of something. I had two or three clients that were in Palantir that when this report came out by Citron, someone pointed it out to me because I didn't see it. Someone told me about it, and I told my clients. They were able to, you know, really reduce their position size because you don't know how bad it's gonna be, you know. Oh, they hit open too. Open seems to always move with rocket, and it is connected to dollar and yields and bonds. I tend to play those in a group. Whenever I see open, I always look at rocket, and including this morning. Open was on my list for gaps this morning, and so was rocket. I never even heard of half of the things that are on this computer. Arctic cooling freezer, 36 heat sink, ultra quiet fan with copper heat pipes. That was new to me. Yep. And then the Quadro RTX A400 workstation video card. Like, yeah, okay, 4 GB PNY NVIDIA Quadro. That that was a new one that I hadn't heard of. And this is their yeah. I don't know. I think it'd probably melt this if you tried to mine with it. But it has the drop down on the side so that if you wanted to upgrade, of course, you just upgrade. But the high end models, this is their $2,000 one. It's their not the very bottom model, but next to the very bottom model. The high end ones were like 64, 6,700, 6,500. Oh, my bad. 9,600. That's nuts. And you don't need it. I mean, I'm running two desktop PCs, but that's because I'm running four brokers. If I am only running two brokers, I would only need to run one computer, right? And these are mine are custom, but they're not they're not that custom. Mine is from Republic of Gamers, ROG. Well, that's a new slimline. Ain't that cute? Oh, that's a beast. Go back to the other one. Look at that thing. My wife uses one of the cubes. It's this tiny little thing. It's not as small as a deck of cards, but the box is smaller than a shoebox. Like it's small. That's what my wife uses, and she loves it. That tiny little thing is sits on her desk. You can't even tell it. Yeah, I seen the bracket, and I asked her if she wanted me to mount it, and she's like, "No, I want it on the desk." But yeah, that's small, bro. It's cute though, a tiny little thing. And she's played Minecraft on it. Like if it's powerful enough. For those who don't know, if you think Minecraft is just a little kids game that doesn't need a lot of power, try running it on your computer one of these days. It needs some. It needs it. Yeah, I can't remember the name of that darn computer of hers, but yeah, it's just a tiny little square, and it's upgradable too, right? It has room for NVMe drives and Pretty neat. So I don't know. I'm gonna give their computer a go. One of mine needs to go to the shop anyway, so that'll give me a chance to put one of mine down and send it to the shop. This thing's kind of neat. Intel Core Ultra 9, 3 fans and a dual vapor chamber. Sounds like it wants to smoke. Support for 5 4K displays in that tiny little thing. Especially nowadays with those slim screens that are USB plug-in. Shoot. You can get 17-inch flat screens, USB plug-ins, put them right into your computer. This little thing is cute though. I like it. Hmm. I don't need to be shopping around for a computer though. I tell you, that's the same brand, Geekum. That's it. That's what my old lady has. The first one that they sent, I gotta say, it failed miserably. It kept rebooting itself like randomly. She would just be sitting there, maybe like on her Facebook or something, and then boom, it just fire off and reset. So I had to send it back, and they sent a replacement, and everything's been good ever since. But the first one that they sent, it was a turd. And of course, it was the first one that we'd ever used, and it made me really cautious. I was like, well, maybe I'm making a mistake with these little computers. But no, it was just that one. Replaced it, got another one. It's been fine, no issues. This is the Rock Nook. The names they have for these things, crazy. But yeah, I've used ROC now for I don't know 3 years. I really like their computers, and they reset nice. About every 2 years or so, I send mine into the shop, and I got a guy that takes it all apart, cleans out all the dust and the dust bunnies, and uh, reinstalls everything from scratch. So I get it back. It's like a brand new computer again. Because I run my computers hard all day, every day, and at some point they just start to deteriorate in the data, and I start having glitches and issues, and finally it needs cleaned out and I start all over again. So what do you got, guys? You want to wrap it up, call it a day for the weekend? Next week I want to go into a couple of systems when it comes to trading. These aren't set in stone. They are adaptable and adjustable. But for an example, just bring this up here. This is my entire swing trade logic right here. These indicators, this setup. And it doesn't really change that much unless I go to the weekly and I can't find what I'm looking for, and then I'll swap that weekly out for a monthly, right? That's about the only change that I make. there's no magic to the indicators that I'm showing here either. It's the idea that you do want to check a couple of boxes on what are you looking at, right? And then from there, you can pretty much just put anything you want on there. Are there videos on the Tradie Ticks? Yeah, when it comes to Tradie Ticks, you definitely want to use their website, right? Like their plugins, Discord bots. I might have a list of commands laying around somewhere that I give you, but their website and their YouTube page are going to have so much more information. We've never really done a video on them here because we don't have the full Tradie Ticks service, right? Like I have a private subscription, so I can log into their website, which I'm about to do here. But we haven't done a video because the Bullish Bears doesn't have full access to everything that their bot offers, and we don't have access to what their website offers. Without logging in at all, I can go to FAQs and I can see about the bots, and I can ask questions, and I'm not logged in, right? So you can get a lot just from here. And then if you go to the Discord bot, you can get the commands and a lot of information all from without signing in. Then jump over to YouTube. They have their own YouTube page. So you want to find the Tradie Tick YouTube page. Their bots are handy, but the number one thing I've had people ask about when it comes to their bots is the success rate. And I have no idea what their success rate is. Hopefully they lay out some answers in their videos or on their website somewhere what the stats are on their win rate or their success rate of the call outs, the golden sweeps and that sort of stuff. And for those golden sweeps, by the way, it's an industry standard. Like if you just Google golden sweeps, you'll see that most companies use the same stats. Yeah, no, as far as I know, none of the moderators have done a video, as far as I know. We offered that to them that we would do an in-depth review if they, gave us full access to the platform. And I think they gave us some janky partial access to the platform, and so nobody ever followed up with it with a video. Traditix is a pretty cool site, all things being equal. They've got Gex stuff. They've got trade strategies, dark pool prints, and then they've got the bot here in the Discord that are giving options alerts. So I would just scroll down here. The one that I use, well, I don't want to say that I use, the one that gets my attention when it goes off is the breakouts, because they're not trying to tell you to buy anything, right? Where's those breakouts? Stock breakout right there. All this is saying is, hey, this stock broke out. It's like, cool. A lot of times it's on a daily or it'll be on an hourly. I'm surprised that they actually had a weekly one here. Usually it's there it is, and like an hourly. And that's MU. That's a known, well-known, good company to trade. MU, reasonably decent options most of the time. And I like that, right? It just says, hey, stock broke out. All right, cool. Thank you. Like I like that. But when it comes to, say, their golden sweeps or things like that, I'm not really that interested in their options scanners. They'll show you some trash, some no-name company that never gets options flow, and somebody will go in and buy like 20 of them, which statistically has like a high ratio. If your daily average is one option and suddenly somebody traded 20, then everybody's like, oh wow, look at that options flow. Yeah, it's a trash company that nobody cares about. So I don't like that they didn't filter that trash out. But if you go in and look, what is useful are the repeats. This isn't one, but you see how NVIDIA, if you keep going and it's like NVIDIA and then NVIDIA and NVIDIA and NVIDIA, and you see 40 or 50 of them all in one day, those can be really useful. We call it UOA, unusual options flow or unusual options analysis activity, but it's the you got to get the matching strikes. So if it was NVIDIA 130 and then this one was NVIDIA 130, which it's not, that's 190. There's two 190s back to back. I like getting unusual options activity like that. But again, you can't configure this. I can't weed out the trash that I don't want to make sure that I'm getting what I do want. So I'm not a big fan of this by itself. Combined, depending on if you shop around on what you're using out of these different channels, you can get something out of it. To me, the best one, stock breakout. I like that one because it's just price. Hey, price broke that range. Hey, cool. Thank you. You know, you can't go wrong there. That's not a good one. That MU was good though. Lockheed Martin breakout, MU breakout. Not a big fan of Toll Brothers. Don't care about that one. Penn, no. So the other thing that you can use this for is for research. Say I want to go long in Google, but I'm worried that there may have been positions being built for Google to go short. I can come in and run a search on the Discord through all of these channels to see if Google had unusual options activity that might be going in the other direction that I want to go. And it can be a good heads up that, hey, watch out. You might want to go long, but all these guys are building a position for a short. That wouldn't necessarily make me want to go short, but it would maybe convince me not to take my long. There's a lot of inside selling going on at T-Mobile. Yeah, shorts are a really bad idea, I think. As much as I keep dreaming about it, I'm just not I'm not ready for it. I don't think the market's ready either. Everybody, have a good weekend. Try to step away from all of this and let's start over again next week. Later.